Hello everyone and happy Friday. Before we share my analysis from these last few days, please remember that neither I nor the SIMETRI team from Crypto Briefing are licensed financial advisors. What we provide is not a personalised investment advice, it is merely our opinions based on our various research and diligence. As always, do your own research before making any decisions about buying or selling crypto.
30,000, which is the first level that I'm looking at for a potential big reversal in the market. And again, if we have a look at the monthly pivot point, it's miles away, so we don't really need to worry about that at the moment. If we have a look at the current weekly pivot point, we're obviously not too far away from there at the moment. So 38.6, if we started to gain traction above there, I wouldn't be surprised to see 39.6 or 40,000 tagged, although those are the indicated reversal spots for me on my chart at the moment. If we've got much above there, then I would be genuinely concerned that a meaningful bottom had been placed in the market. But again, they're just former key support levels now turn resistance. So we've still got a long way to go before we get past those areas. And the next, I would say, daily price close of significance for bears is 34,000. If we started to close beneath there, I don't see a way back again until we test probably close to the summer lows around $30,000. So let's kind of have a recap of where we were last week. And again, we can have a look at where we are now and what could be going on in the next few sessions until we speak again. So we've got this head and shoulders pattern here. Many people expected that it wouldn't play out. It has finally started to play out, although not in a big or significant way at the moment. We've got a death cross going on there. For me, I don't see this playing out yet. I think it's far more likely that maybe we test towards the breakout spot and we get a reversal from that area and we test towards those summer lows and then we get a rebound and we start to copy what very much looks like a left-hand shoulder, and we start to copy that with advances to the top side from around 30,000, maybe 29. That would be my overall indication of what is likely to happen in the market at the moment. And again, we've got some key Fibonacci extension targets that are really pointing towards 30,000 being a nice take profit and final target area. I've got a nice trend line there, and it's I would say a trend line of importance because once the market broke it, it moved up very, very sharply, and then it come down to test it again, and then it moved high. So it makes a lot of sense to me. We've missed this on the downside. If we get a rejection around 40K, we come down and test that 30,000 area, and then we get a nice bounce in the market. Other reasons to be cautious about a little bit more upside in the market. We've got some bullish divergence at the moment that can take us towards that 39.6, which is obviously the former swing low that was broken. Last week, we were looking at that and we were kind of hypothesizing that this could be either a head and shoulders pattern or it could be a double bottom, and we had the fake move higher. Many people were expecting it to break up, including myself, towards maybe 46,000 and then turn lower, but it just proved to be a fake. And from there, we've moved quickly lower. So in short, I'm going to lay out two scenarios now over the short term of what I think is most probably going to happen to Bitcoin over the next few weeks. So from here, if we get past 40,000, I think the chances of this larger reversal pattern forming, I give it about a 30%. So from here, moving up to 44 and forming this much larger reversal pattern, and then maybe getting back to 51. That's a possibility in the market, and I'm not discounting anything. You know, the shape of it is certainly there, but what I think is probably more likely is that we see another leg lower and we see a much larger reversal pattern, and this takes hold to either 46,000 or terminates at 51,000, and then at some point this year we have a much larger drop, and this will strangely enough turn into a larger head and shoulders pattern. So that's what I probably expect is going to happen. And again, we have to factor in the possibility of that drop coming, and we're having this final explosive right-hand shoulder in the market. If we test 30,000, we get this final explosive move up, and then it terminates, and then it culminates in this much larger head and shoulders pattern playing out to the downside. And obviously that's a long way away from happening, I expect. But those are my overall thoughts after going through the charts of Bitcoin this week of what I expect is going to happen. So for me, I'm very much hoping for a reversal down towards the 30,000 area. It's a big reversal zone. It makes sense psychologically. It doesn't make any sense for me, people going long around maybe 32, 33, 34, because the stop you need is just too wide, because you're going to need a stop underneath the summer lows and maybe even 27,000, 28.6. So it's just quite a risky trade, and I think the big money's still stacked down there. So we can't discount a rally around 38.6. If we close above there, then it looks like there's a possibility of this going much higher. A drop below 29.6, it could cause a significant decline, but we'll touch upon that more later, I think. But overall, I think if we were to break 29.6, we could get to maybe 28.4. As long as we don't go underneath there and 27.6 isn't broken, then there's a strong chance that this could rebound. So, things could get very dicey around the 30K level if we did reverse there. MACD divergence is obviously present on the lower time frame, so bear that in mind. And that's probably what's playing out, and these kind of very strange looking flows that we're seeing going into the Fed. Also, the inverted head and shoulders pattern appears to be in the making, and I expect I'm going to be talking about that a lot in the next few weeks and how that all transpires. So let's have a look at Ethereum now. Overall, Fibonacci target achieved. The 161.8, 2175 has been tagged, and we've had a reversal. But again, it just goes back to the same theory. Is that really going to be enough if you're expecting the summer lows and you need to put a stop basically under 1700? Are you really going to be going long around there, as the low is a lot further away? So this would probably be the ideal spot to go long. So I'm skeptical, and we could be going back to test that initial break spot. So for me, again, I much rather favor a sweep and a test of the summer lows at some point, and then this turning into some type of head and shoulders pattern, very similar to what we're seeing with Bitcoin at the moment. That makes a heck of a lot more sense to me than this just U-turning from here and heading back to 3.6. I don't give that a high probability of happening in the market. Much higher probability for me, as I say, is an eventual test of 3.6, which makes absolute perfect sense. It doesn't make sense from here to head higher, or we have just a decline from here towards a city level like 800. I think the market's going to tease this out, and again, we'll just have to see what happens. But that would be my overall inkling about what the market's going to do over the next few weeks and months. So, in summary, Ethereum has bounced from a key fib level. It's not surprising that we've seen the bounce back. It's hit a big Fibonacci target. Head and shoulders pattern could still form, so bear that in mind over the next few days. A return to the summer lows could certainly be on the cards, and it's definitely my primary scenario. 3,600 is still missing, and it remains a huge magnet for any type of upside reversal or target for bulls over the next few days, weeks, and months, I guess.
And thank you. I hope you found my thoughts helpful. If you'd like more, please click the subscribe button for Pro BTC Trader and join me every week on Wednesdays for our live trading war room and daily email updates.